Hello, everyone, and welcome to our August 2026 Tokenholder update call. My name is Willem, and I'm leading protocol relations at the Lido Ecosystem Foundation, and I will be moderating this session today. So during our previous call back in May, we discussed Lido's Q1 financials and an assessment for the 2026 targets. We touched on the state of the staking market and the impact of the Kelp DAO incident specifically. We also dove a bit deeper into the protocol security features and the next steps for Lido DAO. And since then, it's been a busy few months. So today, the Lido Labs leadership team is going to cover the H1 results, the latest product updates, Lido contributors read on the ETH Issuance Debate, as well as plans for the future. Now, following those updates, we're going to be opening the floor for questions, and you can post those questions on whichever platform it is you're currently watching this on, be it X, LinkedIn, or YouTube. So please do share your questions, and we will try to cover all of them as best as we can. And after this sort of presentation, I will be back to host a Q&A session with Vasiliy, with Kate, our Chief Operating Officer, with Izzy, our Chief of Staking, and with Nemo, the Wisp team lead. But for the first section, I want to pass the microphone to Vasiliy, the Executive Director at Lido Labs.
Hey, folks. It's been a year since we started these calls. I think we've come a long way. It's very exciting to do a fourth one. I'm Vasiliy Shapovalov. I'm co-founder of Lido, used to be CTO, research lead, now executive director for Lido Labs. And I will remind you why users choose Lido products. And that is because we make great liquid staking, which is simple, secure, low cost, very easy to use for stakers, with deep liquidity, great secondary market. We also offer Lido Earn, which allows you rewards on ETH and USD by deposit ETH, robbed ETH, rob staked ETH, USDC or USDT, with auto-compounded returns daily, DeFi native strategies, and first loss protection by Lido DAO. We have offers for institutional customers using staked vaults, staked ETH, Lido Core, or Wisdom Tree ETP. Where you can customize your validator set, your terms, compliance, protocol security, staked ETH liquidity, all in one. And we have a privacy-first AI harness called Wisp, which is a really good local-based AI harness that allows you to have local-based private AI transcripts, and agentic work on your computer where all files and work stay on your machine, and private inference is using trusted execution enclave technology where no data is retained or even known by the inference provider. This is our governance strategy structure, same as always. Lido is a token holder voting DAO, and token holders have complete control over the Lido Treasury. have the admin rights over staked ETH protocol, have good oversight rights and intervention rights on the legal entities used by Lido contributors, and hold the purse strings for the foundations. So like offer the grant to the foundation and on the terms that token holders seem to like. All value accrues to the DAO. Protocol fees flow directly to the Treasury. Foundation grant provided with annual snapshot vault. There is full control over treasury locations, defined oversight and intervention rights over the legal entity. The reporting is public, like today. And since the last call we had, we have value flowing back via staked ETH LDO trades, which I'll dig in a bit more a bit later. This is a leadership team. I'm the executive director. Izzy is chief of staking, and Kate is chief operating officer for Lido Labs. And we measure our success by making the best staking product on Ethereum while growing long-term treasury surplus. We also make other products as well, so I think this phrase can change, but today it stays. The agenda for today is I'll touch up on first half a year financials. I will update you on products that we do. I will do a deep dive into issuance debate for Ethereum, and I will touch on next steps we have. So these are the numbers for first half a year H1 of 2026 DAO financials, and their major events that defined it were a big drop in ETH price and big rise in staking share of institutional stakers like Bitmine and Sharplink, and corresponding reduction of the share of liquid staking and restaking protocols. So despite that, we are operationally in the black before the one-time non-recurrent spending on contributing to DeFi United incident, DeFi United initiative after Kelp incident. Overall, we are $4.5 million in the red. So like we are in the red, but operationally, first half a year had been positive despite the ETH price being much lower than we supposed in the planning phase for the year. It was planned for $2,700 dollars of ETH price, and we had as low at like $1,500 in the first half a year. This was achieved by being very conservative on spending, much more conservative than planned, and backloading some of the expenses to the second half of the year. So staking is especially looking good here, as it's about more than 6 million in the black after all operational expenses, and despite the low ETH to price in dollars. Treasury state in the first half a year had been sliced almost in half, almost entirely due to ETH price falling by essentially 50%. We started the year with almost 3,000, and on the end of July, it had been barely above 1,500. The current number is looking much better. The reason is most of the treasury is in staked ETH, so it is very sensitive to the ETH price. The one important change and something that is new that hasn't ever been true about Lido before is that outstanding LDO supply went down by 16.5 million LDO, about 1.8% since January. This is due LDO purchases by Lido Labs for Tier Peak Reserve and by Lido DAO with utilizing market opportunities initiative. So there are more LDO entry that there had been in the start of the year, and there is less LDO on the market. There had been 3 batches started with 2 and 2,320 staked ETH deployed with almost 15 million LDO returned to the treasury at an average price of 30 cents. We also have automated buyback mechanism leaf called Nest that will buy back LDO when there is a supposed surplus for the DAO. It has permissionless execution, conditional on the market situation, which is not true today, but is expected to work when revenue is over $40 million annualized, which is mean above the $2,730, like something like that. We have a full report that you can read by the link that is going to be repeated at the end of the call, so I'm going to skip it now. I'm now talking about product updates. So for staking, the most important changes on the market had been again ETH price and a notable change in staking segment sizes, as in institutional staking segment grew up very notably since the start of the year. When Bitmine, Grayscale, and other like custodial and treasury companies started staking pretty crazily, as in since the start of the year, we have pretty consistent 50-60 day long entry queue for staking. And Kelp hack incident, which together with Eigenlayer stupid incentives went to APR maxi segment, going very much down. So it's much smaller than in the beginning of the year. With one notable data point is ETHFI 3 ETH, the second biggest staking token reclassified to liquid LST in July. Which led to, among other things, and together with flight to safety trend after Kelp incident, led to the growth in LST segment. Our share of the liquid staking segment went down a bit, not because we lost stake. We actually are ahead on the amount of ETH we have from the start of the year. But because the segment grew with the 5 ETH, moving from APR maxis to this one. The rest of segments are pretty stable for us. So a good trend for us is that DAO take rate is growing. The most notable changes for this had been in end of December, when we changed the economics of curated module fees. Previously, it was a 5% of all. Now it's less and depends on the tier of node operator. Then we also wound down simple DVT clusters, which were the lowest DAO take rate module, and updated curated module to version 2, which also improved the economics a bit. We are looking ahead to community staking model with the 0x02 credentials release, which is also going to improve on this parameter, and Walmart validator market mainnet release, which enable fee competition in credit module, which is expected again to drive the numbers up. Institutional staking had been under target but growing, as in we have ETP with the wisdom tree in Europe, exchange trade product, which has grown 36% in ETH terms. It's Europe's first fully staked Ether ETP. There is a filing from OneEgg for staked ETF in US, which is under discussion. It's not going to be a fast resolve. We have good news about custody integrations. Encourage integration is Leaf, the first federally chartered US bank support for staked ETH minting, which was one of the things required to have allocation from SharpLink to staked ETH, which is not yet staked, but committed $200 million of staked ETH allocation. Lido Earn had been kneecapped hard with the Culp incident. You can see it on the graph, but since then it had recovered, is recovering, I guess. And we have growth in Earn USD. Fees are often off to improve growth for the vaults. It's currently not the numbers that we want to brag with, right? So we want growth, but sometimes when the API are good, they can be switched on, which led to gross revenue of under $400,000 by the July 31st. And I'll pass the mic to Nemo to do a bit of an update on Wisp.
Thanks, Vasiliy. Hi, everyone. Nemo here, Wisp lead. So yeah, for those of you that were here with us on the last Tokenholder call, we were explaining that we were internally testing out some of the private inference type of tooling because we didn't feel confident and comfortable to share a lot of sensitive informations within Lido DAO with the different providers of the inference. So from that perspective, what we started developing back then was Wisp, which is an AI private harnesser or private first harnesser. And I'm happy to say that in August, we went live. What I mean by that is from the internal tool that was tested and used inside of the contributor ecosystem, moving publicly completely for anybody to download on usewisp.io. Currently, we support Mac and Linux machines, and we're working on a couple of more things. So let me tell you what was going on up until now, and let me tell you what will happen in the future. What we shipped in August is the public accessible application. 3 tiers are now open. Anybody can sign up and start testing it out. It's a multi-model environment. What I mean by that is that we are supporting through providers such as Fala and Tinfoil, models such as GLMs, Schemies, 2.6, GPT OSS, Quens, so on and so forth, and also like on a paid tier, Kimi 3 for now. What I'm happy to say in the last couple of weeks that we have like 200 active users with the 5% conversions to paid users, which is really exciting, especially like in the early stages of a product such as this. We also added a couple of local-based features, such as the local transcripts. So right now in Wisp, you can download Whisper-based open source local model that is around 500 megabytes. We are now testing with the different models to kind of like improve even more on the transcript level. But basically, it's offering you for any types of calls or any needs to record the transcripts and then basically utilize it as external memory inside of the whole Wisp, which is really good if you're working in a different chats or projects within your teams or within like some needs that you have, and figuring out how to use these memories for the wider work. Other than that, we added also NCPs, so you can connect to your favorite products such as Notion, Linear, Google, and all kinds of different connectors. You can build your own MCP servers, host it locally, or utilize some from the other products. Other than that, what is next for Wisp is basically there is a couple of things that we started seeing from the feedbacks that we are getting from the users. So on one side, definitely Wisp is gaining a lot of attention on the business-to-business side. So we are talking to numerous different potential pilot users and customers on the different feature sets that they would like to see. What we learned from that is that we need to develop a couple more things that are right now in the weeds. Such as API access. So right now, Wisp is basically an application layer harnesser, but we are working on developing API access or cloud access for people that they can either utilize it and kind of like put it in their systems or their on-prem systems and utilize all of these different moving parts and pieces. We are working, and it took some time on how the sandboxing environment on the Windows. So like right now we are in the last miles of testing and iterating there, which is really exciting because like for those of you that maybe don't know, in the B2B environment, machines are still kind of like prominent machines from the user perspective. So we are excited to enable also that ecosystem. Goes without saying that we got like a multi request to also add a mobile version. So right now we are working on an Android app to like get you Wisp in your pocket and be there for you for the private conversations that you would like to have everywhere. And we are figuring out the really interesting ideas around deterministic skills and workflow marketplaces, both for any type of user that want to kind of like explore workflows that exist, and also internally for the organizations, because as you probably expect, different organizations would like to have like their own tight workflows with the guardrails that they can utilize across the whole organization, depending on the different access layers and granularities. So yeah, once again, you can go and test Wisp on usewisp.io, download it for Mac and Linux now. And you can follow us on Twitter also. Thank you. Vasiliy, back to you.
Yeah. Yeah, this is again the report you can read. And the summary from me is use Wisp. It's great. The local transcript is amazingly working well. There is no reason to use cloud versions like Harmony or like Granular or whatever. When you can not feed your data to like everyone basically. And to reiterate, is market has not been great in first half a year. ETH price went down like up to 47% from the start of the year and recovered, but not fully. Growth for staking had been below target, as in our TVL grew from 88.7 million ETH to 9.4 million ETH, but the staking share went from almost 24% to 21.5%, because of notable increase of staking market due to Bitmine staking and other custodial staked providers. Earn has been knicked out by kelp exploit, but is recovering now. To Earn ETH is back to almost 80,000 ETH. Earn USD is over $30 million. And we launched Wisp, which is very exciting. Before, one of expenses of DeFi United donation, Lido DAO, was apparently positive. But overall, we are in the red for about $4.5 million. Now I want to touch issuance debate. So long story short, there is a pretty long-going debate about Ethereum staking issuance API and stuff, which culminated into Ethereum improvement proposal 8363 called Tapered Issuance Burn, which is a redesign of Ethereum staking issuance curve, which introduces two major changes. One is the validator rewards tapered towards zero as staked share approaches 50% of ETH supply. Right now, it's like roughly over a third, over 34%. And also decreases the amount of issuance and staking APR at current levels and like all the practically possible levels to I think about 1.5% at current APR at current level of stake. It was published 48 hours before the Keynote proposed for inclusion deadline and was proposed for inclusion, which is a bit last minute, I guess. It's something that would materially affect Lido's future and has a decent political cloud, if you will, for governance cloud for Ethereum behind it. That is why I think I need to give you my read on it. It's important. So the issues had been debated for a long time. We have a consistent stance here. Change should take into account consequences for Ethereum's solid data set, security, and operator economics. It's almost always done from the macroeconomics perspective, amount of like the justification on macroeconomics level, like APR, amount of ETH staked, like all the macro parameters, but microeconomics of the staking are pretty bare bones in these proposals. We are not opposed to issuance changes. The problem is real, but our concern is one shouldn't move with a concrete monetary policy change before the consequences had been mapped, acknowledged, and either seen as beneficial or acceptable and worth the negative externalities are worth positives, which I'm not convinced at right now. We are pretty active in this debate. The first reply in the thread is coming from other contributors, and we published our consolidation position, which more or less is what I'm talking about here. The problem is real, that is validator set and staker set is getting more centralized year over year, though I can say that Ethereum is resilient very well. It's the most decentralized network in terms of stakers and validator set, as far as I know. And Lido has played not a small role in this with how we work with validator set. But if you cut spending for security, leave the decentralization, you get worse one. And you speedrun the centralization. It might be acceptable, not necessarily a bad thing, if you think you have excess of security and like decentralization is good enough and like can be worse and it's going to be fine. I think that can be okay if ETH is seen as like better Bitcoin, as a digital gold. It doesn't need that much security or decentralization to be useful. Like Bitcoin is working for years on like 3 big miner pools, and like everyone's okay with that. But I'm firmly in the camp of Ethereum being the platform of world financial system. That's what I think Ethereum should be when it grows up, right? And I think that the robust validator set is a unique competitive advantage here. There is more trust in Ethereum being always on, resistant to malicious hard forks, etc., etc., because of its validators. So I think the underlying question is more about like what in the future for Ethereum is like more important. What properties are more important? And I think it's pretty hard to reconcile that to a compromise. Whatever happens here, so I think it's going to be resolved one way or another. Not on this hard fork, not likely, but in the iStar upgrade or when Lean Ethereum goes on the latest, I think. Lido can generate a surplus in a low issuance regime. It's we'll have to make Lido staked ETH much leaner product worse for stakers. We'll have to lower operating cost, something we're already doing, which has like some of it can be done with no major consequences if done right, not in like in one day, I guess. But beyond some point, there will be reduced ability to respond to incidents and develop safe upgrades. So like there will be less upgrades, and it's going to be harder to make them safe. There will be smaller curated set at this point. As in, we will converge to a minimum operator needed for credible resilience and security, more homogeneous, performance-driven, little room to reward operators for public goods or extra effort or making being a client team or something. Choosing cost over diversity, like at lowest safe and sustainable costs, like geographic diversity, is not something that can be economically viable at minimal issuance and low ETH price. And much less support for home staking, community staking. In a very tight regime when like everything's bad, both its price and issuance and market share, we can consider a fee increase. It's going to be contested via DAO governance, I think, but that is something that can be done. I'm not seeing before the situation is very tight. So this is something that on lab side we recognize as a major risk, like dependency on Ethereum issuance and ETH price, etc., for Lido is quite big, not safe enough, I guess. Which is why that the goals for 2026 is going for revenue beyond staking and making extra products that are not Ethereum related directly. Like we have Wisp, we have Earn now. Earn is generating revenue, even if it's mostly done for growth now. And another revenue stream is expected to be proposed in 2026. And we are working towards leaner staking part of the Lido by reducing operational expenses. We already done some of that on the validator set and Lido Labs side. And we can do more. So on the issuance cut summary, we don't expect it to be confirmed for inclusion in the next hard fork. I think the discussion is going to be kept alive for the next hard fork and the latest Ethereum upgrade. We track very closely the roadmap and shape of the future of Lido, assuming both its price and issuance stays highly volatile. And we prepared for the full range of outcomes, which is why we are working on like new products and reducing costs. So our next steps are for the second half of 2026. We have internal goals for our units. And set in the beginning of the year, they were they need to be ambitious but achievable. And what we thought was ambitious but achievable in the beginning of the year right now doesn't seem achievable. Like we aimed for 27% share of staking, and our share of staking market went down actually. So the revised target that is ambitious but achievable is about 23% at the end of the year. Staked vaults didn't take off as well as we thought they did, so they should. So the target is also revised downwards. And Lido had been damaged by the kelp incident, so its goals also revised a bit down. The one place where revising the targets up is DAO take rate, which we targeted like 6%, and now 6.20 is the ambitious target. And our metric for institutional staking is it's roughly the same but in different units. So like it's changed but not up or down, but more like how it's tracked. We're also working on two products for non-ETH low risk DeFi, which I am hoping to tell you more about in the next quarter. And I think that's it. That's what I wanted to say. We have some time for questions.
All right. Thank you, Vasiliy and Nemo, for those updates. Time to move on to the Q&A session. Just a quick reminder for everyone who is, send your questions on whatever platform it is you're streaming this on. We're going to do our best to address as many of them as possible, but we're also aiming to wrap up the call at 3 p.m. UTC. So happy to invite Vasiliy, Nemo, Kate, and Izzy to the stage again. And let's start with the questions that we received before the call, and then we'll move on to the ones that were asked in the chat. First question, this will be for Vasiliy. Kelp cost the DAO $6 million. What's actually different in risk management now?
Quite a bit, actually. We reshuffled it pretty hard, so we put much more effort into risk management now. The most important changes is that we do much more involved due diligence. A lot of it is automated now. Like now it's possible, which makes deep due diligence possible. A very hard commitment to monitoring. If we have concerns, if we like the opportunity for deploying the capital, we put a lot of effort into fixing some things. Like, for example, we worked on improving the time lock situation for Pendle, making DeFi better, so yeah, that's we have a new fact sheet format for stuff. We have tighter ongoing monitoring positions, smaller test allocations, external risk factors monitoring and stuff.
Got it. Okay. Next question is, why does the project prioritize stakers while LDO holders incur losses? And I think Vasiliy also route this to you.
Yeah. Yeah, we get questions like that sometimes. Yeah, so we do both. Like we prioritize stakers and LDO holders. That's like we can't not do both. Like business interest and users interest are long term always aligned. If you do well for stakers, you do well. If you start like enshittifying the products, like max extracting, etc., you will just like lose the clients. That's something that is not a long-term thing. Like you can't do this with long-term thing in mind.
Got it. That makes sense. One more question. Don't you think that the 10 million in annual buybacks against an FDV of 300 million is a paltry amount?
There are like there is direct answers for this question. Is like I think it's a pretty good amount actually. Like that's about like more than 3% of the TVL. That's like very rare to see this in like any kind of business. You can this means that like either business is very undervalued or there is some reason for that. Like so. There are like crypto businesses that are have like better percentage, but not for long, and they are usually quite risky in some other ways, like maybe regulatory risk, maybe some other kind of thing. But what I'm want to say here is that it's about like what is the right thing to do with the treasury or revenue or something. It's not always buybacks. You, in general, the like rule of thumb here, you want to do the highest ROI thing with what you have, and what is it depends very heavily on the organization, on the business, on the market, etc., etc. And sometimes it's buybacks when the price is right, when the revenue is good, etc., etc. We have a situation right now when the price is right, but revenue is not. Like we have $4.5 million dollars in the red this half a year. So it has to be kind of like not all in, right? But many times it's investing in growth, like making new products, improving products, or something like that, or having a big war chest for the like bad times to come. For example, this is also often a very good thing to like war chest. Having a war chest is a good thing to have. And so you have to weight it like everything against everything.
Yeah, that makes sense. Thanks for the response. I know you have to drop off a bit early, so thank you for the presentation and the answers. And I will do the rest of the questions with Izzy, Kate, and Nemo.
Yes.
I guess
Sorry.
Izzy. Sorry. I guess Izzy, just routing a question to you. Institutional is now the biggest segment, but most of the flow has gone to Coinbase, Binance, and Bitmine. Are you still pursuing these institutions, and what sort of growth do you realistically expect here?
Yep, good question. So actually, there's an interesting assumption here that it's the biggest segment. I don't think it is yet, but it's definitely like the biggest growth segment. So most of the incoming flow did indeed go to centralized like native staking providers. Let's look at it this way, that are essentially offering delegated stake as a service through custodial, like highly intermediated means. If we examine the pattern that institutional adoption of any kind of technology generally takes, but especially cryptocurrencies, we see that they start like very, very low on the risk curve and kind of go up the risk curve as their understanding and handle over how to assess risk, how to value opportunities and things like that evolves and matures. So even though most of the initial flow went to like highly intermediated centralized competitors, over the last couple of months, we are actually seeing that institutional adoption is starting to slowly pivot towards more on-chain native applications and kind of being able and willing to take more risk on the DeFi side of things, especially in search of being able to do more with their collateral. So in July, we had the best month for the Wisdom Tree Lido staking ETP, which is the first fully staked ETP in Europe. And in August, Sharplink Gaming announced that they would perform a $100 million allocation of ETH into Lido as the staking provider, so that they could use essentially STETH's unique ability to be premier collateral in DeFi. So as this kind of maturity of the ecosystem continues, and we see institutional participants with vanguards like Sharplink and BitMine, who are essentially like at the forefront of pushing for this kind of adoption, we believe that the institutional staking like sector or segment will be like the largest source of growth for Lido on like a 2 to 3 year horizon.
Thank you. That makes sense. Next question is for Kate. The Q3 projection is negative. What sort of ETH price do you need to break even? And what's the plan if we stay below it for another year?
Thanks for the question. The way I'm thinking, so there are two numbers here. The first one is to close 2026 at zero. You can check it out in the Tokenholder report. We need an average ETH price of about 2,850 in H2. But speaking of another year, to break even on steady basis at today's cost base, we need about 2,500. And I think this is the real number. And I think that is what is actually is asked. And I should say that staking itself is profitable. It made money in both quarters, even with ETH down almost 50%. So our plan is not a rescue plan, it's a growth plan. We are currently spending on products that strengthen the ecosystem and earn on their own, less dependent on the ETH price or issuance. And this is our current plan. Yeah.
All right, thank you. I think the next question is for Nemo. How many paying users does Wisp have?
Yeah, so it's around 10 users, but do note that like Wisp is live for 2 weeks right now. So some other interesting things that we're seeing right now is basically that the daily active users is around 11%. The weekly retention is like around 30. Conversion, as I said, is roughly like 5%. And the stickiness or DAO versus weekly active users is around 35%, which is really good for the kind of like starting product, because usually like 25 is generally considered healthy. We do expect that like a lot of these things will kind of like expand, especially how we are adding like these B2B type of functionalities and B2B type of use cases that people are asking for. Because obviously, as you know, like in the B2B cases, the expansion is like not just 1 or 2 seats, but like you're unlocking 10, 30, 50, 100,000 seats, depending on how big are the organizations.
Got it. That makes sense. Next question we have is, it was mentioned that spending was reduced. How much did that save and what was the trade-off? And I think, Kate, you're probably best poised to answer this.
Yeah, thanks, Willem. Spending definitely came down 3 ways, I'd say, below the ag budget for this year, below our internal forecasts, and below last year, of course. So we expect to save about 3.3 million against the ag baseline budget, and for more against the request in a whole. Regarding the trade-offs, in the short and medium term, I don't see much that we gave up. Actually, what we are doing, we spent less on partnerships and integrations, so we are not seeing a clear return. We cut hiring plans for roles we no longer expect to fill. We, of course, keep costs tight. Several lines came in well under the plan. We also deferred some swaps and spendings into H2 to catch a better price. So the savings come from spending more carefully and from asking what that each cost actually returns. That's it.
All right, thank you. Just a reminder for everyone that you can continue to ask questions in the chat, and we'll try to get to them. The next question that we have is, what is the go-to-market or growth plan for Wisp? Nemo.
Sure. So yeah, as I mentioned previously, we are more and more getting inquiries from the kind of like B2B side, both to be used as an application inside of different organizations, but also as an infrastructure type of thing. And when I say like infrastructure side, it's like both on the security side, so kernel policies, or imagine it like a piece of puzzle that security teams and the DevOps teams of different organizations need in order to kind of like monitor what kind of informations are flowing between the agentic world and the sensitive data that you have inside of your organizations. But also from a perspective of like a private inference API with the proxy routing, which is helping with this anonymization of like the search that is happening on through the Brave API or different types of resources. And also like on the compliance side, because like through all of these things, like depending on the jurisdictions of different organizations, the different compliance needs would be needed to be catered. Saying that, obviously, we can talk about the go-to-market that is more catered towards the B2B. So what I mean by that is that we'll do our best to spend less time on Twitter. As you know, Twitter is like a special breed and mostly catered, especially around Lido contributors to the crypto ecosystem, which we are not neglecting from the privacy perspective and anonymity and security-wise, amazing ecosystem. But also what we are kind of like targeting and spending more time is like discussing with different communities and influencers on the platforms that we weren't experiencing before, such as like Reddits, LinkedIn's, Blue Sky, so on and so forth, and also communities around lawyers, accounting firms, insurance companies, compliance organizations, so on and so forth. So we do expect that with turning to B2B side, that we will spend much more time into doing also like inbound and outbound discussions directly to the organizations, but also like traditional marketings that I mentioned across different platforms and workflow use cases. We really believe in what we're seeing right now is that people are getting a aha moment in these situations where there is a perfect workflow, because do remember that majority of people that are still not onboarded in artificial intelligence world or agentic world are not that, let's call it agentic savvy. So from that perspective, these people would like to have like some type of hand holding both from the user experience side and user interface side. And that's when I mentioned like all of the people that are not dev oriented in operational team, in the financial teams, accounting teams, lawyer teams, insurance teams, marketing, so on and so forth. So yeah, hope this answers the question. As I said, like things are like constantly changing, as you can expect with building in prod, how we like to say it. So I hope that we'll have like more interesting updates for you next time.
All right, thank you, Nemo. Next question that we have is, how did Lido fare during the fall of restaking? Izzy, do you want to take this one?
Yeah, for sure. So it's a good question. STETH as essentially like premier DeFi collateral had a co-opetition kind of nature of a relationship with restaking protocols, right? Because on the one hand, LRTs were kind of competitive to STETH as an LST, but on the other hand, STETH could actually be used as collateral within Eigenlayer or within certain LRTs themselves. The immediate kind of effect, I guess, of the layer 0/Kelp incident that happened in April was that staking TVL drastically fell, both on the LRT and LST side, as essentially like a lot of loop positions had to unwind, and people took a more risk-averse approach to how they're deploying their assets. But if we look at kind of like the next couple of months, we see that most LRT protocols are kind of continuing to dwindle from a TVL perspective, whereas Lido's TVL has basically regained where it was at the beginning of the year, and even surpassed it if we're looking at the last month, basically in August, where we hit the Pico top, I guess, of TVL for the protocol this year. And I think there's kind of like two components to this. One is there was obviously this flight to safety following the hack, where people were choosing to forgo the slightly more incremental yield in order to go for a protocol that they felt was safer. And the second aspect of it is that restaking has kind of shown that there's very few what I would call like real yield sources out there. And Eigenlayer recently voted to turn off the Eigen incentives for most of the LRTs and even for STETH that had been deposited to Eigenlayer. So that subsidized yield that was kind of creating momentum for a lot of these assets and a lot of these competing protocols kind of like went away. And there's still some yield sources, and there's still a little bit of eigen rewards going to some AVSs that have like slashing enabled and things like this. But essentially, I think we're going to see that as the yield that was heavily subsidized by token issuance dries up, there will be a flight, or essentially like a lot of users coming back to STETH, preferring its utility in DeFi and in general, like the overall risk profile of the token.
All right, thank you. That makes sense. I think next we'll take a question from YouTube. What's on token 2049? Izzy, do you want to take this one as well?
Yeah, sure. Hey, Ken. So I don't know if we're going to be doing anything in the vein that we did in the previous years. So for those of you that don't know, for the last 2 years during or around the Token 2049 conference, we had Stakers Guild events, basically events that where we welcomed node operators of all sorts, from professionals to home stakers to those participating in CSM, or even to those participating in the ecosystem in general and as competitors, to join us to talk about staking, to talk about validation and Ethereum. This year, we will not be doing any event like that, or if we do, it'll be like a very, very small kind of like a drinks event. And we will be announcing it like closer to our participation at Token 2049, but we will have team members there. So anybody that's going to Singapore, feel free to reach out to me on Twitter, and happy to meet up and discuss any things like Lido or staking related, or hopefully some other things like Vasiliy intimated at the end of the presentation, that we'll have more information to talk about around that time.
All right, thank you. Lots to look forward to. I know we're approaching the 3 p.m. UTC deadline, so appreciate all the questions, and thank you to all the speakers for their responses. I hope for those of you that asked the questions, these answers provided a bit more clarity. And of course, I want to thank everyone for joining us today for the last hour. And 2 final things. First is the Lido H1 report, which contains a deep dive on Goose Calls as well as the financial update. That's the first QR code on your screen. Secondly, please register for the September Lido Poolside call, because we'll have like a very exciting list of guests, including Joseph Lubin, founder of Consensus and chairman of SharpLink, as well as Joseph Shalom, the CEO of SharpLink. And they'll be sharing more on the recent 200 million SharpLink ETH staking allocation that's going through Lido. We're also going to have a few contributors sharing the first effects of the recent Lido core upgrade. We'll talk a bit about the progress of the curated module V2 rollout, and probably some other topics as well. So please help us to share and spread the word about these live streams. It really helps people to stay up to date and connected with what's happening at the DAO. And with that, thank you again, and see you next time.